Welcome back, you legends. I'm Dr. Cal, and this is going to be a very quick update video because there's something absolutely critical that just happened today on the chart. Mostly, guys, today was a flat day, a range day. Nothing major happened, even if we take a look at the different sectors. Everything seems calm until I pull up this chart. Up top is HYG high yield bonds, the smart money. Below that is the S&P 500, the dumb money. What do you notice, guys? Look at this. This was Friday. Big green candle on the S&P, big blue positive candle on the smart money. Today, we had a massive down day in the high yield bonds, down nearly 1% as the S&P put in this tombstone, extremely negative tombstone topping formation candle. If we take a look at the daily chart for the S&P 500, same look here, guys. Notice rejection here, rejection here, rejection here, the exact same levels. If I put a box here, a red box, you can clearly see that we have a major resistance zone. And this resistance zone will likely require a very solid, big bazooka, a bull bazooka to break through it. And that will not happen until 2 p.m. Wednesday after the Fed meeting. What does momentum look like? Very negative. Bearish divergence on momentum, lower high versus the high back in mid-April, even though the S&P put in a slightly higher high today. So we have a tombstone doji, we have the smart money dumping, and we have the PPO failing to cross over with a bearish divergence. If I actually take a look at the Dow Jones, it looks pretty much the same, guys. Bearish doji candle. If I take a look at the NASDAQ 100, same bearish doji candle at resistance. And then if I take a look at the summation index for the NASDAQ composite, still negative, crossed down last week. It is still negative. We are at resistance. This resistance will require a major news event to break through it because it's a massive resistance level, rejected numerous times. And again, that is not likely to happen until 2 p.m. Wednesday. That's the best case scenario. That's assuming the market rallies post-Fed meeting. The summation index for the New York Stock Exchange is still negative, crossed down last week. The New York Stock Exchange has established a bearish divergence, lower high versus the prior highs, as the S&P 500 put in a slightly higher high today. All of these signs indicate that in the very near term, we're looking at negativity coming back into the market, sellers stepping in again until at least 2 p.m. Wednesday. Now, the VIX is back at support and it is forming a major bottom. The VIX is now forming one of my favorite setups of all time, a double bottom with a higher low on the PPO. Right, this is a bullish divergence, lower low on the daily chart and a higher low on the PPO. This is one of my absolute favorite bearish setups to trade. You'd still need confirmation, and confirmation comes with a green bar on the histogram. So switch from red to green. That would confirm a double bottom because that would confirm a bullish cross on the PPO. And guys, a bullish cross on the PPO for the VIX means that volatility is bullish, volatility is rising, and that's always negative for the S&P 500 because when volatility expands, a lot of selling accompanies that volatility. A rising market likes declining volatility. A declining market likes rising volatility. So to round this video out, guys, I'm expecting a pullback at least back to the 9-day moving average, even potentially to the 20-day moving average at 411 on the SPY, at least heading into the Fed meeting. That's going to be on Wednesday. 2 p.m. we'll get the announcement of the Fed decision. Then we'll get the Fed conference at 2:30 p.m. And that's going to be an extremely volatile day coming up in 2 days here. So I'm looking at least a pullback as the VIX expands, as sellers step in, as the money follows what the smart money has been doing, which is selling. Then we could see potentially, guys, a rally on the Fed meeting, a follow-up rally on the earnings of Apple. And at that point, I believe the S&P will put in the top for May, and then we'll start to see volatility expand again and the S&P pull back all the way to fill this gap left from March 28th at 395. Here it is, guys. Fed interest rate coming in at 2 p.m. Wednesday, conference at 2:30 p.m. Same day, and then we have Apple earnings a day later. So a lot of volatility going to be compressed into tomorrow, Tuesday, Wednesday, and Thursday. So be very careful out there, and slap that like button right in its face on your way out. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.